Now, live from KUSI, this is Good Business San Diego. Sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking about what's important to you, your home, your health, your family, and your money. And the following segment is sponsored by Wilsey Asset Management. Now, as investors, we're trained to learn to diversify. That's what we all hear. But should commercial real estate have a place in your portfolio? Brent Wilsey, president of Wilsey Asset Management, offers some guidance today. I think this is the first time we've talked about commercial real estate.
I talk about it from time to time because the question is, should it be in your portfolio? Yeah. And what the question is now, like, well, wait a minute, it's not done very well. I mean, over the last 5 years, I think it's earned like 7%. So why in the world would I even talk about putting money into commercial real estate when my stocks, especially technology, has done so well? Boomed. Yeah. Well, we got to go back to the old principle of buy low and sell high.
Let me write this down. Buy low, sell high.
And it works very well. It's worked over history very well.
Yeah.
And the thing is, right now, stocks are high, technology is high, so you want to sell that and look at buying something that's on sale, like commercial property, and I'm talking especially office real estate. And if you go back over the last few years, well, actually, let me go back to year to date. Right now, your large investors, who are what's known as your smart money, because they have money, have purchased about $4.6 billion of commercial real estate, more than's been sold. And that's the first time that's happened in 3 years. So that's a big movement. Also, too, over the last 3 years, I mean, real estate, commercial real estate's down about 17%. And actually, from the peak of the market of commercial real estate, it's down about 36%. So things are low. And going back 50 years, only been 2 times that commercial real estate has fallen more than 10%. That was during the 1990s. And the second time, if you're old enough to remember, 17 years ago, the 2008 Great Recession. Other than that, real estate has not fallen that much over the past 50 years. So this is what you look at now. It seems to be on sale. You want to look at getting into commercial real estate, especially office buildings.
So really a buying opportunity. Maybe hasn't existed in the last couple of years.
Yeah, yeah. And the thing you want to look at, the best way to get into it, and you may call your broker, like I saw that guy Brent Wilsey on TV talking about commercial real estate. I'll call my broker and ask him about buying it. Yeah. Be very careful. Do not buy private real estate, because that locks your money in. And we've had people come over to us, they've been with us for 10 years. They've had these private REITs for like 15 years, they still can't get out. You want to buy what's called a public REIT, which is stands for Real Estate Investment Trust.
Right.
These you can put in, even $100 you can put into them based on what the trading is on them. Yeah, it's very small to put into it. It's a good way to diversify a portfolio. Diversifying also too works because if you go out and buy one building, commercial property, you're not diversified. With a public REIT, we have one in our portfolio. It's in like 12 different cities. They have different buildings. You get diversification. You also get the management. I don't have to say, oh gosh, we got to fix the toilet in building A or whatever. So right. You got the management for that. And what you get the appreciation of the real estate. And many times with these REITs, you can get a 4 to 6% yield on the dividend. So I like the public REITs a lot, but you've got to have a 5-year time horizon. You're talking real estate, not trading.
As with everything, you've got to have a longer time horizon.
Well, yeah, I mean, right now we've talked about before, and I saw it today from Robinhood about the prediction markets. We talked about that, so we won't go there. That's terrible.
Okay.
Good investors should be long term.
And as with everything that we have discussed, you have to understand the fundamentals. I mean, your fundamental analysis is really one of the things that we keep coming back to. What are the fundamental things about real estate that we need to know? Certainly public versus private REITs is one.
What you want to know is what's called the FFO, and that's funds from operations, because with real estate you back out depreciation. You want to know what is the debt situation of that REIT. Is it too heavily in debt? What is their cash flow? You want to understand the rents. How are the rents doing? When are the leases coming due for renewal? How many are coming up? What is their conversion rate? Also, too, you want to make sure that when you're looking at this, that they saying, well, gee, the rents are very low. Well, there could be something called rent abatement, where they signed up all these new leases. Well, when you sign a new lease as a tenant, you get sometimes 6 to 9 months of free rent. So you've got to understand deeply what's going on. That's why before we invest in anything, it's 10, 15, 20 hours of research, because you got to do that here.
Interesting. Thanks, Brent. More information online at smartinvesting2000.com. That's where you can get Brent's podcast, where I heard about what it is that we just discussed. Thanks for coming in, sharing with our audience.
You're welcome.
Be right back with more of Good Business San Diego right after this.